Hi guys, welcome back to the channel. If you haven't subscribed yet, please subscribe. Please like the videos, it's very important. Press the bell button, hit all, it's very important. And also share with one other person. Hope this video helps others as well. And we're trying to grow the community to a thing. So today somebody asked me a question from one of my big groups. So I've got multiple groups, and the big group, these are big boys, basically. They buy a lot of Bitcoin, and I do a lot of stuff with them. So anyway, they asked me a very good question. They said, dude, who controls the prices? How come the price goes up and down and everything? And these are hard questions, right? So obviously some of these guys, they're buying at expensive prices, they're seeing the price drop and everything. So I want to explain a few things, but for those of you who don't have time and want the short answer, who controls the prices? We all do and we don't. Okay, so if that's enough for you, then yeah, I think this video is not for you. But on the long term, let me explain how this works. When you buy a Bitcoin, I'm going to give you a round up figures, right? So you bought a Bitcoin, the price was around £10,000 or whatever, and you bought 0.1 or 1 Bitcoin or whatever, right? So let's call it 0.1 Bitcoin, which is 10% of a Bitcoin. You bought that. When you bought 10% of a Bitcoin, your Bitcoin remains exactly the same price. The price doesn't change, right? What I mean by that, your 0.1 Bitcoin or 1 Bitcoin is exactly the same. It hasn't changed. The only difference you will see is the price. Now, I always tell people that if you're entering Bitcoin, you've got to enter for the long time, right? At least 5 years. If you don't do it for 5 years, then forget about it. It's not worth it. Because the thing is you're going to be, you're going to lose your rationality. You're going to be emotional. You're going to, I don't know, there's a lot of sentiment involved. Like when it comes to money, a lot of people only value things with money. So when you see, something for example, £1,000 drop down to about £800, you panic, right? And then you sell. So now coming to the point of who controls the market, let me explain. When you buy on an exchange, you are basically giving a positive effect on the blockchain, which the exchanges take, and the blockchain can see that was a buy order. That's a positive. When you panic and you sell for a loss, and you think, oh my God, okay, I'm out now. I say, I'll save my money because I was about to lose money. But what you didn't realize is you're the one who's dropping the price, because you just put a sell order at a lower price than you bought, right? So people like us who buy and hold, we're on a different league, right? And what I mean by that is we're not triggering the price. Also, I do P2P trading. So everybody knows this. I do P2P trading. I buy a lot of Bitcoin and I sell a lot of Bitcoin. And we don't affect the price because I'm not doing it on chain. Right, so when I don't do it on chain, there's no trigger. I'm just basically, exchanging money for Bitcoin or Bitcoin for money, one or the other. But I'm doing it privately. So when I'm sending from wallet to wallet, it doesn't affect anything. The wallet doesn't know whether it was sold, bought, or just transferred. So it's treating it just like a transfer. That's all it is. But on an exchange, it's very important, right? So what I tend to do most of the time, I don't sell on an exchange. Because I don't want it to trigger anything. I'm a bull, right? I need it to basically trigger buy orders. So I will always buy from an exchange. If I get the good opportunity, I will buy from an exchange, but I would never sell on an exchange, number one. So that's how I'm controlling, I believe that I'm contributing towards the price going up. The other thing is mathematics, right? We know there's only 21 million coins ever going to exist. We know that there's about 5 million coins that are lost, probably more. I don't want to give an exact number because on-chain analysis says something, others say another thing. We know some history about it, but I'll say just for the random sake of it, right? We say about 5 million coins are lost forever. They're never going to be recovered. And then you've got how many shall I say, right? So 5 million out of 19 million. So approximately we've got 19 million coins in the market right now, which is 18 point something, but I call it 19 million. We've lost 5 million. There's 14 million available. Out of 14 million, about 10 million are in whale wallets, right? These are mega giant wallets. So there's 4 million available. And out of those 4 million, another 2 million have just been picked up by the big whales during this current dump. So there's about 2 million coins actually remaining in circulation on the exchanges. Now remember, the exchanges are what will basically affect the price, the buy and sells on the exchange. That's what's going to affect the price, not simple transfers or anything like this. And then the other people that would control the price is also the traders. Now, I have to explain this to you, how traders actually mess around with the prices. They don't mess around. I mean, I don't, I don't blame them. I'm a trader myself. So the way it works is, say for example, someone puts a buy order, says, okay, I'm gonna go and I'm gonna, I think the price is gonna go up. So they do that. And we say, like, for example, I'm going to go back to the £10,000 or $10,000 example again, right? Just to keep things. Or actually, let me just do current, right? So currently we're at 31,000, right? In fact, to be precise, 32,500. So I say I'm going to open a trade, and I say I'm going to go long. I'm going to do a 10x or whatever, 25x or whatever I want to do, and I say I'm going to take profit at 33,000, right? So I'm just looking in the corner because I can see my little widget there. So just say I'm going to close my order and take my profit at $33,000. So this is a live scenario. And then on the other side, we've got people who are saying, well, some people are going to start taking profit at 33,000. So we're going to short the market at 33,000. So they put a buy order, they put a sell order at 33,000, and they say we're going to short it. Now this is it's like a bit of an avalanche effect, right? So let's just call it this way. So this person goes around and he wants to short the market. He or a group of people want to short the market. They say we're going to short it at 33. I say I want to take profit at 33. Guess what? We're all affecting the market, because now we have this catalyst basically where everybody's saying exit. The market then dumps, okay, because and the shorts are winning. So shorts are making money while this is happening as well, by the way. So the market dumps and we've taken profits, so it goes down again. This is how you see the ups and downs. Now this is where things change. If the buy orders are more than the shorts, right, or the sell orders, then we have a different story where the shorts will get annihilated, they will lose money, and we win, right? So the pressure, it all depends on the pressure, how much pressure there is. Now, when looking at the charts currently, you know that, or we all know this from the charts, there's not really much support or resistance. Now, what we mean by support or resistance, right? So we can only make a support or a resistance based on history. Say, for example, today we climb all the way up to 50,000, and then, some people decided to short it at 50,000, and the market drops. That is now the new resistance. Then a few days later, weeks later, whatever, we test the resistance again and we beat the resistance. So that now basically we beat the resistance and we've gone further, we've gone to 60,000. And from 60,000, we drop back to 50,000. Well, guess what? That previous resistance is now the historical support. So every one of those points that we've ever had in history is a support, right? So previous resistance will always become the current support. So this is how we find the good support lines. Also on support, we need to see volume, right? How much money was put into it? How many people were bullish on making that a support? So looking at support lines, it could be anything. Like, so we go, one line to another, and every time say, for example, the market drops, we have different low points, different points of support that we will say, okay, it's gone down further. This could be the next support, and we can only do this based on probability. There's no definite answer to where the support is. Resistance is slightly different, because resistance could be anything, right? We might have a day where we just basically go on a parabolic ride and go all the way to $1 million without resistance at all, because there is no bears out there. There is no shorts or sell orders out there to actually affect us or stop us from going there. And there will be a day like this, basically, where, there are days, a lot of the time actually like this, where the shorts are not enough, so the shorts are not confident that the market's going to go down, or they're not blocking the bulls basically, and the market has to go. Now, going back to the 21 million coin scenario, so it's 21 million coins. We have a supply shortage. We know what that is, right? So right now, what you have to understand, people, the way the price drops is, you've got guys coming in at very low prices, made a ton of money. We went up like 3x, 4x, 5x, whatever you want to call it, 10x, 100 times, 100% more than what we had before. And what they're doing is they're taking profits, right? Now, they're most probably just taking out the initial investment, right? Which is absolutely fine. There's nothing wrong with that. That's when we have a market correction. And most of us are actually okay with that. We're okay with the market correction. We want the market because we're all taking profits, right? We don't want to leave our money in there and then, see it go up and down, because that's, too dramatical for some people who don't have the patience. But every smart investor will put money in and start taking profits, which he would treat as his initial investment return, because that's very important. Your initial investment has to return. So the sooner we can get all of this, the sooner it's better for us. And let's say, for example, if I bought one Bitcoin today at say $32,000 or $33,000, and tomorrow Bitcoin goes to $64,000, just for the sake of it, I will sell half my Bitcoin and I will take my $33,000 out and then carry on with the other half, right? So basically my initial investment's out. I'm not losing any money. However, during that specific time, the market will dip a little bit. So what do I do then? Remember, I've just made 33,000 into 64, right? Or sorry, 66 or whatever you want to call it. I've doubled my money. I take the money out, my initial investment out, market dips down below. Well, the first thing I'm going to do is I'm going to buy more. And I'm going to do the same thing over and over again. Buy, sell, buy, sell, buy, sell, over and over again. Now, while I'm doing this, I'm just accumulating more and more and more Bitcoin while making sure that my initial investment is not affected too much, right? Now, this I can do on a bull market, but on a bear market, not entirely. 50-50 chance, right? On a bear market, I might make 10% or 20%, but I'll try and take out as much as I can so I can minimize my risk of losing all my investment. But on a bull market, I know it's going to go up. So if I know it's going to go up, I'm going to try and take out my investment as soon as possible, and then keep on buying the dips and keep on jumping up. So buy a dip, go up, sell, buy, sell, and carry on doing this, right? So I can do this as a spot trader all day long. And every time I do it, I get more Bitcoin, and that's one way of growing it. I actually do use this exact same method when I'm buying and selling as a P2P trader. So for example, I'll give you a good one. Recently, someone bought some Bitcoin from me at the lowest rate possible in the market. Means when the market dumped, when we went to the bottom, I think it was about $31,000, they bought some Bitcoin. Just today, actually, they bought some Bitcoin. I actually bought the same Bitcoin, so I sold to them, and then I need to replenish my cycle. So when I replenished, I bought Bitcoin again for, I think it was like almost about $1,000, close to $1,000 more than what I sold for. And for me, I'm just replenishing. But I made sure that when I sold it to them, I sold it for a small commission, and my commission covered that loss. So theoretically, I sold to them, but I didn't actually make any money. However, I did make a very small amount of more Bitcoin while I did all of that. Because that's the goal, right? Just accumulate more and more Bitcoin while basically making sure your investment is safe, right? And you minimize your risk. So that's what I did. But then again, look, I'm not a financial advisor. I don't advise anybody to do any of this stuff. When it comes to Bitcoin, I always say to people, unless you're willing to be in it for at least 5 years, don't go in. You might make money in 5 minutes. It might take you 5 years. That's one of the things. Also, anybody who goes into Bitcoin, don't calculate your Bitcoin with money. Money changes every day, right? Today, your money could be worth a lot more. Tomorrow, your money could be worth less. I mean, just look at the foreign exchange, right? People trading money with each other. But when it comes to Bitcoin, when you're buying a Bitcoin, whatever decimal point of a Bitcoin you bought, that's what you got. Your Bitcoin doesn't change. If you bought one Bitcoin, you still have one Bitcoin. The money could be worth more, could be worth less. So it's very important to understand that the Bitcoin is Bitcoin. One Bitcoin is always worth one Bitcoin. I've always promoted that. So I hope you understand that markets are controlled by us, by our emotions, by our sentiments, also trades. And as I said, like if the people are taking profit and shorts are on the same level, then you would see a big dip. That's because everybody's just taking profit, nothing else. So recently, a lot of people have taken profit. People who came into the market back in early 2020, people who came into the market when we hit the all-time high, the 20,000 all-time high, we broke that. So they bought at $20,000 and we climbed all the way to $40,000, but they didn't take a profit out. But instead, when it came down to about 35 something, they said, you know what, market might dip, we'll take the profit. So people who bought at $20,000, if they exited at 35, right, you can see they made a significant amount of profit. So obviously they're going to get out, they're going to wait on the sidelines, let the market recalibrate, right, you know, and then just buy back in again. That's the idea. Take the profit, keep some Bitcoin, buy back in again, and carry on. So yeah, I mean, that's all I can say. I mean, this is the thing. We actually control the market. Also, as I said, please, you know, it's not just about me in this video. There's other information out there as well. For example, charts. If you want to see charts, TradingView is very good. In fact, you can actually use majority of their functions completely for free. Okay, completely for free. I used to pay for TradingView. I don't even pay for it now. I don't even need to. So that's one of the things. Glassnode is very good chain analysis. So you can actually go there, also use their charts for free. However, they do have some very good premium functions that I do use, which I do love, and I'm trying to support them as well. That's another thing. TradingView, I'm not so bothered because majority of the charts on TradingView, I actually have the free versions or full versions, I would say, on the exchanges, and whatever basic tools I need are there. So I don't really need any extravagance or anything extraordinary on those charts. So yeah, I mean, there's a lot of stuff. There's a lot of stuff that out there that you can follow and you can see. But exchange inflow and outflow is very important. And currently, there's more outflow in exchanges than inflow. And current levels of BTC available globally on exchanges around 2 million. Also, people who are buying these whales, right, who have more than 1,000 Bitcoin, they're growing by the day. So you just have to wonder who is buying, right? Who is buying at these rates? And where are they buying from? And I can tell you this much, they're not buying from exchanges. They're probably buying on an OTC or a P2P. They're just using the transferring the money, because the data has not touched the blockchain. It's not showing up as a buy order or a sell order. So it's important you understand all of these things. And also you understand that we've just come out of a bear market. We're in the bull market, in the bull cycle right now. And you know, this is just the beginning, where we might see a few weeks of going up, and then we might see a few weeks of going down, right? I'm not saying, you know, some people are getting excited when they see a daily candle going up and down. I'm not excited at all. I've seen it too many times. We might have weeks of going up and then weeks of going down, and we're going to follow this cycle for a very long time, at least to the end of this year. And every time we go up, we might go up, you know, 100x, right? So we're going to go up 100%, for example, from whatever price we are. But then we're going to expect to drop down at least 50%, right? You know, I'm saying maximum 50%, probably even more, but it doesn't matter. Look, if you bought it at $20,000 and we climb all the way to 100,000 and we drop back to 80%, doesn't matter. You're still on 20,000, right? You still got your initial investment out. You still got your initial investment in there. But if you took profits during that time, then you don't really lose anything. You're in profit now, because that's what you have to understand. Take profits on the way up, also take profits on the way down, and then if you want to start accumulating, then accumulate when the market goes down. Start accumulating, because that's the time when you need to buy the dips, basically. So I hope this video is helpful. I hope you found it helpful, and please make sure to like, subscribe, and share with one another. Also hit the bell button, all. And I'll see you on the next one. So until then, take care. Bye bye.